Hello, what is going on, everyone? Welcome back to another episode of the Soccernomics Podcast, the home of football economics. My name's George Lyons, and every week I'll be joined by special guests from our expert team of journalists, alongside my trusty right-hand man, Temba Shumba. We'll be delving into the economical, financial, business, and legal matters behind the beautiful game that we all love. If you're a fan of football and the effects that football has on the economy and vice versa, continue watching and be sure to subscribe to our YouTube channel or follow us if you prefer listening on Spotify and other streaming services. Today I was joined obviously again by Temba, but also this time Cameron, where we discussed an article that I actually wrote. This article is pretty interesting. If you want to go and check it out on the Soccernomics website, of course it's soccernomics.net. Topic is called, Could Football Clubs Pay Player Wages in Bitcoin? Now, before we get into it, I'm just going to let you guys know, nothing has actually come out to say that this is what's going to happen. I can't say that this is going to happen. This is purely something that I just thought of the other day, based on a very interesting story that came out at the end of December, where an NFL player actually got in this contract where he was getting paid 50-50 cash and cryptocurrency. It's a very interesting topic, especially in what's going on in the markets at the moment. Of course, Bitcoin has been in headlines for the past couple of years, but especially recently with the recent activity in the market. Everything going from GameStop to Dogecoin, of course, can't forget Dogecoin. But yeah, Bitcoin, especially just because it's the leader, it's got the majority of the market for cryptocurrencies. And I was actually discussing what could potentially happen, not only if players get involved in the market, what could happen to the market as a whole if football players do get into it. Also as well, how football clubs could benefit, and also we're trying to be as unbiased as possible. So we're trying to say, okay, yes, these are some potential benefits, but what are some potential issues as well that implement Bitcoin and other cryptocurrencies into football? Of course, this is not facts or anything like that. This is just potential things that could happen, just based on observations from what we learn, obviously, by studying and seeing in the market as well. So yeah, don't take anything that I've said literally, but hey, it's just here for your entertainment, and it's an interesting thought, because one day we might actually see this come into fruition. So, but yeah, if you guys do enjoy this episode, please hit the subscribe button, hit the like button. Feel free to comment as well. We'd love to hear from you, because most of our supporters haven't actually subscribed, but we are growing as a channel exponentially at the moment. We've had like 40% growth so far in 2021. So thank you so much to everyone. But apart from that, guys, we'll get into it. Bye. What's up, guys? George Lyons here. Welcome back to the Soccernomics Podcast. Yeah, boy.
Back again.
We are back. As you can see, me and Temba here. We're in the Soccernomics.
George, FC. I like that drip right there, bro.
I think I like yours more.
What you got on there, man?
It's the Soccernomics FC.
Oh, that Soccernomics research right there.
Yeah, we got the new Soccernomics FC indoor kits. Yeah, pretty much we have an indoor team.
Man, it's clean, bro.
It's pretty cool. We're top of the league of Div 1. We're killing it right now.
Standard procedure, man. What do you expect?
Procedure. But we shouldn't be talking about that right now. Yeah. Let's not get on too much of a tangent. We are joined once again by Cameron.
Big Cam in the building.
Big Cammy boy. How are you, mate?
Yeah. Found some spare time on the calendar these days.
Yeah, but you've been pretty busy, haven't you? You've got your masters on right now.
Yeah. Week 2 of that now.
Yeah. It's going
Coping well.
Long days.
Yeah, you know the vibes. Happy post-Valentine's Day, gents.
Oh,
thank you. I spent it with me, myself, and I.
Oh, yeah, can't relate.
George is hanging tonight. He had a big night last night.
I had a huge night. I'm still very
done his hair
hungover.
quickly for you guys, so that's always handy.
Excuse me if I look terrible, boys.
100%. Valentine's Day is always eventful, you know?
I don't look good. I don't feel good. But yeah, today we are back, of course. What we're talking about today, it's a very, very interesting topic. I'm going to put it out there to say to you guys that this is purely just like in terms of like a potential idea. It's not like a reality. I'm not giving an opinion on anything. This is just me putting it out there of, hey, imagine if this happened and what could happen. What I'm saying is, with Bitcoin, can Bitcoin eventually come into football, and can football clubs actually start paying their players wages with Bitcoin on other cryptocurrencies?
Yep.
Obviously, I just used the word Bitcoin because everyone knows what Bitcoin is. It's the big thing at the moment.
Biggest cryptocurrency out there.
100%. It's got like 60+% of cryptocurrencies market cap. So it's obviously the main front runner with that one. And they've been in the news a lot lately. And I thought, hey, there's a couple of things in here that it could be very interesting just to see if it has something to do with football potentially in the future.
Yeah.
So
this article was basically written by George himself.
Yeah, it is. Yeah, no pressure, right? I was just saying to the boys before, I am pretty nervous actually for this one because it's it could go either way. The most important thing, obviously, like this is just. We're not professionals. This is purely just
throwing ideas out there, man.
Throwing ideas, Be interesting to see what you guys think of it as well. We'd love to hear from you. So be sure to comment and communicate with us what you thought of it and what you think of Bitcoin as a currency, like a potential currency as well. Because what's going on right now is essentially Bitcoin could potentially become. It's picking up traction to eventually become an actual regulated currency.
Mm-hmm.
At the moment, it's a decentralized form of form of payment, right?
Yep.
Exactly.
It's such a volatile market at the moment, and it's become famous purely because of it's extreme rise and extreme drops in the market as well. I remember when I was at school. Don't know about you guys, but that Bitcoin when I was in year 11, year 12. It was like, what's Bitcoin?
Yeah.
Why are these people becoming millionaires overnight? Why am I not getting on top of this?
I mean, Bitcoin's only been around for 12 years. It was founded in 2009.
2008, 2009.
Yeah, that's it. By Satoshi Nakamoto.
Yeah.
Good pronunciation.
Arigato.
That's it. Got some arigatos down there.
Why?
I've been taking lessons. I hope you have been. No. Pretty much. Yeah. So this was pretty much Bitcoin was used as the problem at the moment with paying for things is that not only is it centralized to the form as that all the power is within a very small group of people, but it also has the banks involved. Whenever you make a payment, they take a cut. And all that sort of stuff as well, and it can be unsafe. So everyone's heard of credit card theft, credit card fraud, that sort of stuff. Bitcoin was essentially created to try and cut out the middleman, try and mitigate some risk, and make sure that all transactions are actually available for all the public to see.
Yeah.
Hence the decentralization, so it's less regulated. What comes with that, of course, is it's extremely volatile, and at the moment, it's with it not being a currency, it doesn't exactly have a value to it. Of course, there's a share, not a share price, but it's kind of sitting at 60,000 Australian dollars.
66,000 Australian at the moment. Yeah,
it's crazy. That's what one
was
Bitcoin
15 grand per Bitcoin, and that was oh lord.
It's crazy.
But recently, the price of Bitcoin actually jumped up 100,
30%. Wasn't
it?
Yeah.
I think it's listed at 48,000 now.
Yeah.
And that's purely off the fact that Tesla was the one who actually bought 1.5 million.
Yeah, 1.5 million of their own.
Billion.
Sorry.
Billion.
Pretty close.
Yeah, 1.5 billion. Elon Musk is actually quite a big advocate for cryptocurrencies in general. Everyone's seen what he was posting on Twitter about Dogecoin as well.
Yeah.
He's a big fan of the old Dogecoin.
He's big. Who isn't?
I still like that. The fact that someone made that purely as a meme.
Yeah, and it's
now not a legitimate currency.
No, not at all.
But a legitimate cryptocurrency, it's a real thing.
It's actually a proper cryptocurrency, but. Bitcoin's obviously the main one, and that's one that most people have a bit of belief in and a bit more trust in for potential currency in the future. Tesla, like Temba said, has invested $1.5 billion in crypto, and they are looking to take it as a form of payment, which is huge.
I really enjoyed the article. I mean, I really encourage everyone to go read the article. For me,
thanks, mate.
Trying to gas you up, fam. Trying to gas you up. But yeah, man, I think people are always adverse to or scared about the unknown, and Bitcoin doesn't really have that big of a track record for people to really invest in and pursue as an option, because at the end of the day, you have to think about it that Bitcoin is kind of rivaling government currencies. You know what I'm saying? So because it's regulated by a decentralized authority, people still have very apprehensive to really dive into this type of thing, and I feel that what George actually compensates in the article about contracts being utilized by Bitcoin currency, I think that's just a big risk, but it's also something where a player and the club in itself would have to weigh the options of risk and reward in that situation.
100%. 100%. pretty much. There's so many things so many little rabbit holes you can go down with this, but I've gone down some particular ones.
Yeah.
We'll start off pretty much when you actually. Why should you include cryptocurrency into a player's contract? Like, what could benefit from this, and what could happen in the market of not only cryptocurrencies but in the market as a whole? If you include that, like the big, again with this. This is what's going to happen. Like, no one knows what's going on in the markets. That's what the beauty of it is. It's a complete floating market, right? But yeah, in terms of Bitcoin and then actually implementing it into a football player's contracts, if Cameron, you want to have a look at, scroll down to where we've got it on there. It all started, right? If you want to explain what happened in the US and how this sort of idea has been planted, right?
Yeah. So basically, it was December of 2020, so very recently. There was a player in the NFL, so Russell.
I stitched you up there, didn't I?
So you can correct me, no doubt. Russell, I'm gonna pronounce it as it's spelled. Okung.
I think that's it. I don't follow NFL.
I'm sorry, Russell. Okung. So Okung. Russell.
Okay.
Russell.
Yeah.
So he became the first ever American footballer, and I believe probably one of, if not the first, like, major sports people,
I think so,
to have part of their contract be paid in cryptocurrency. So he's got a $13 million salary a year, and 50% of that will be converted to Bitcoin via, you've said, Strike. So I'm assuming that's just a facilitator.
It's just a facilitator of payments. Pretty much you can translate Bitcoin into currency and vice versa.
Yeah, so obviously despite the league insisting, it sounds weird that the league would have to insist that you pay your players in legal tender.
Yeah.
He's gone and said, no, I want 50% of it in crypto.
Yeah.
Now this is obviously very new territory, like for regulators, for leagues, for players, for clubs. It's a very strange situation to be in. I could not imagine someone that runs a club myself. I could not imagine someone coming up to me and going, you know what, this legal, money that you're giving me, it's nice.
Yeah,
but I'd like some Dogecoin instead. It's a really strange situation to be put in.
It's crazy,
and it really opens up a can of worms for going forward, because there is no sort of case study to look at, really.
Yeah. So it's unknown territory essentially, and of course, there's huge investors in Bitcoin, which we'll get into in a minute. But in terms of like why you should be including Bitcoin in footballers' contracts, we've got to think of it as football as a whole, all right? So, obviously, Bitcoin has appreciated a lot in recent times. How much is it? Like
25% right now?
25% in terms of what?
It's about like 350% in the last sort of 12 months.
In 12 months.
It's staggering.
It's huge. Like, but in recent times, it's like gone up.
Yeah, like 30% in a month or something. Yeah.
It's mad. Like, that sort of growth isn't normal, by the way. If you're new into investing, like, that's
not everything functions like a GameStop.
No, not at all. But hodl anyway, so But yeah, this could be so beneficial. Of course, the attractive part of Bitcoin why it might be attractive for footballers is the fact that, hey, we can increase our earnings. Not that they're not earning enough as it is, but as we know, everyone's out trying to make coin, right? 350% growth in 12 months. That sounds pretty good to me, right? Mm-hmm. So yeah, it's just an opportunity to increase your income, especially when you're earning ridiculous amounts of money each week. Like, you can afford to.
If you're earning, $100,000 a week, you can probably afford to risk, maybe 10, 20 grand of that, and sort of bet on the future that you can sort of risk the like potential gain now to have a bigger return in the future. Obviously, that sounds like just normal investing, I guess. But if you can afford to go without that, on the potential to have, even if it was 30% return in a year, that is such a big increase.
So good. It's better than cash, isn't it?
Exactly. Compared to getting your,
Yeah. It's very interesting sort of point on that, and that goes for any sort of investing at all. That's why most people do get involved in investing. In terms of Bitcoin, though, and in terms of like players, why it could be beneficial for the player, of course, is to increase their returns. Why would it be beneficial for a football club? This is this is something like a concept I just sort of like made up, right? It's just sort of like an interesting way, because these days there's a very capitalist sort of society when it comes to football, right? The biggest clubs, the biggest organizations, people with the most money attract the most players, right?
Yeah.
It's just you can't avoid it. Like, it just is. You hear about like the traditional top six, your Real Madrids, your Barcelonas in Spain, that's so on. They have the best players. They're the ones that are the most successful. In terms of in contracts, of course, these bigger clubs are going to try and swoop in for players from those lower clubs who have got like the best prospects. They're going to approach him, and they're going to approach him with money. Obviously, they approach him with the stature of playing for the club, but a big thing is with a pay packet, you know. So it's pretty interesting, because if you introduce like let's say crypto cash contracts into football contracts, it's sort of interesting, because all of a sudden a football club, say Southampton for example, they can use that up their sleeve to potentially combat any sort of other football teams coming in to try and take their players. What I mean by this is, say for example, James Ward-Prowse, let's say he's on £75,000 a week, yeah? If Man United come in and they say, hey, we'll offer you £100,000 a week in cash, of course, obviously that's much better. But if Southampton can then go, hey, look, we can't afford £100,000 a week for you, but we really like you're our best player. Like we really need you to stay. We need you for the club. If money's what you're after, how about we introduce a part payment? Let's say 50-50. We keep you on the current contract of £75,000 a week, but we pay half of that in crypto, in Bitcoin. You can potentially earn more than £100,000 a week, but it's not putting us out of pocket. How does that sound?
For me, man, like obviously, like that's a good way to put it, between clubs, like negotiating how they would like to attract players to their clubs, or like retain the players that they currently have. But I just want to play devil's advocate in that sense, because in a way, also, like, we all know that there is no concrete alternative to hardcore cash, man. Like, you know, money talks. Like, and like I'm saying, if a club, me personally as a player, if a club offered me that option to be paid like 50% in cryptocurrency, like Bitcoin, for example, that would be very appealing on an investment point of view, because Bitcoin, to my understanding at the minute, is not something that's still used as a form of payment exchange. So strictly, you'll be holding on to a asset just floating out there that's worth so much dollars, but you can't physically use it, so to say, on a regular day-to-day basis. I feel like there's only a couple of companies who have actually incorporated the Bitcoin payment exchange. Not everyone does that.
It'd sort of be like getting paid in gold almost.
Yeah.
Like, okay, but, you know, we'll pay you £45,000 a week, and we'll give you then whatever the current market rate, you know, worth 20,000's worth of gold bullion, you know. Sort of similar to that from their perspective. But yeah, as you said, really right now it is less of a like an actual useful transactional currency, and more of just something to hold and sort of buy, sell, trade. Interestingly though, as we were talking about before with Elon Musk's massive buyout, so there was news in the Sydney Morning Herald recently, so that was sort of when the Elon Musk situation broke, that MasterCard were looking at opening up options to accept cryptocurrencies as payment on their platform later this year. So that would be groundbreaking, because that would be the first sort of mainstream sort of not old world, but you know what I mean, like established
merchant, you know,
payment merchant that would allow it, and that would really catapult it into the mainstream. That's really what it's missing. Is its usability, its
liquidity. Hey,
exactly.
You can't get more liquid than cash unless it becomes literal currency.
And to mention one thing that you pointed out in the article, George, as well, was like one of the benefits about Bitcoin is about its like price elasticity. And the fact that regardless if the price is wavering, the demand is still there for it, you know. But there has been occasions where, even though the price has fluctuated, like recently, I believe I read an article recently that from January 1st to January 26th, that the actual value of Bitcoin dropped by 80%, which like took a number of days just to like, I think it grew by 80% to actually recover into its monetary value. But what I'm trying to say on my point is, with Bitcoin being incorporated into football contracts, I feel like it would be more beneficial, like you said in the article as well, for the more mature type of players. Because if you think about a player's football career, it's very short, right?
It's very short.
What, you get into the game like what? Maybe if you're lucky, 19, 20.
That's when you're earning big money, probably anyway, at least.
Like I'd say like most footballers earn their big cash in their prime like 28, 27. On average, like a football player's career is like what? Maybe 12 years. So maybe you retire at 33. From that as point, some players might look at it as like, okay, I have this really short time gap to make as much money as I can. If I'm getting a good amount of money a week, half of it can be incorporated for me to actually gain more than what I'm getting on a physical contract. That's something that like a lot of players could actually look into. On the other hand, since that window gap is so short, on some people might look at it, I rather get that physical aspect right now, because there are other options other than Bitcoin that pose lesser risk and higher reward that you could get into. That's just my point of view.
100%.
And you sort of looked into that a bit, bringing in the good old economic concept of a risk aversion.
I did. Have to.
So interestingly, as was mentioned with Ten Burn in the article, you sort of older players, your more mature players, may be more inclined to accept it from a business point of view, from a like post-playing career aspect. And that's something we're seeing quite a lot. A lot of players sort of getting involved in business ventures outside of football, just that once they retire, they've still got something to do. PK, very heavily involved in tennis. I believe Chiellini recently got his master's in business from a university over in Italy, or maybe it was Harvard.
Really?
It was pretty impressive.
Really?
He's doing big man things, yeah.
Matthew Flamini.
Matthew Flamini,
Arsenal legend. He's worth like
cult icon.
He's potentially worth like $1 billion because he has, it's like a chemicals thing. I can't remember what it is, but Google it after this, guys.
I'll have a look.
As soon as you finish watching this and you like and subscribe and comment, look up Matthew.
I like that plug. That was a good plug right there.
No, he's
pro. Absolute pro.
His estimated net worth, just because of the valuation of the company that he started while still playing. It has, I think it's maybe it's a biofuel.
Yeah, probably.
But plenty of players are doing this, and so it's obviously from that aspect, the older players are more likely to think, right, something I can do post football.
Yeah.
But when you bring in the concept of risk aversion, which is that certain people are more likely to want to take the risk, and some people aren't. So personally, I know I'm quite risk adverse, so I prefer to avoid risk.
I don't.
So someone like George, very risk adverse.
Yes.
That's probably why you felt so shit this morning, mate.
Yeah, I like
the
a risk
on the big night.
Living life on the edge.
Took a risk on a big night before work.
Calculated risk always.
But normally
calculated how much water and food I needed. 3 hours sleep.
Normally,
sick.
It's going to a Russell quote meme there. Normally, you would assume that younger players tend to be more like risk seeking. So that's sort of where you get that dichotomy of your old players being more favourable as a business thing. Your young players, because they're young and stupid, maybe. But they're also just more likely to, if they do take an 80% loss, like you mentioned before, they've still got plenty of good playing and earning years ahead of them to make it up.
It's interesting because like it's just a matter of preference, really. There's no one person, no one demographic of footballer who would be inclined to take this opportunity or not take this opportunity. It's pretty much just a case of like you said, risk aversion, how much money they're on, and what commitments they have already. Like time's a big thing. Some players you see, like obviously like Cristiano Ronaldo, like you said, Gerard Piqué, they're very much involved in, okay, let's have a succession plan for when I'm finished with football, right? They're thinking of life outside of football all the time. A lot of footballers would be doing that. It wasn't the case, like 30 years ago, which footballers found and ended up becoming bankrupt. So there's a big focus on it. But you could also say as well, young players, they're on a lot of money for their age. A lot of them, not all of them, but those who are, they can probably afford to, be a little more risky with your money. You think
about like Mbappe, who knows how much he's on? Like, I wish.
Yeah. But, I wish I was on there.
What is he, like 20? Like, he's younger than us.
Yeah, he's very young. He's younger than us, and he's on a lot of money.
Yeah,
doesn't need
like if I'm sure he wouldn't want to, but like if he put 50 grand into Bitcoin one week and it went down 80%, I'm still thinking he'd be wearing his Dior Jordan 1s.
It wouldn't affect him too much.
I don't think he'd
That's it.
Be too hard off.
Yeah, exactly right. But that brings an interesting sort of proposition, because I've talked about as if introducing this crypto cash contract as if it's just a sure thing. Like, yeah, you can earn this. That's not the case. Just like anything in the stock market, there's no bet. Like there's every chance of it going wrong as opposed to going right, and that's the risk side of it. That's why it's got returns, right? The risk is return, and it could so easily go the opposite way. So that's what players have to take into consideration. Yes, you can potentially earn a lot more than £100,000, £100,000 a week cash if you do a £75,000, even the same amount, but 50-50. But you're taking on a substantial risk. You're exposed to one particular cryptocurrency. One like it's not even like it's diverse. It's one thing. It's very very volatile. The risk, high risk, high reward, but also
because at the end of the day, like you mentioned, I think even in the article, Bitcoin, it does have like 60% of the market share, but you have to also take into the fact that there are alternative cryptocurrencies that are out there, and just because like a contract is, how can I say, situated in the Bitcoin, like say like I don't know, 20 or 30% of the contract would be Bitcoin. You need to look at the other cryptocurrencies that might be popping off at the same time, and that like kind of creates that volatility in terms of if you risk adverse, investing in such a thing would not be for you. But like if you have the leverage to expend, I don't think it's something that would really hamper you too much going forward.
Yeah, and it's just all about diversifying your portfolio, like in that sort of stuff. If you want to keep it in just crypto or so on. But this is just like potentials, all right? Another potential like this downturn that you don't think about initially when you're like, okay, let's introduce this 50-50. It's like players' well-being and club well-being as well. If they've been doing that, not only are these players aren't necessarily economists. They're not avid investors. Like some might be, but not all of them are. They're not very educated in. And that's by
See,
no
that's
means
where we
a
come in,
bad thing. That's where Soccernomics come in.
Let me look at the contract, man.
Speaking of which, we are starting. No, I'm joking. But yeah, it's they're exposed to what's going on in the market. They're not necessarily aware, and that's not by any means an insult. It's that they're footballers. They're not investors, and investors still lose money too. So you've got to think of how to protect that. And in many ways, you'd have to think about, okay, if the club's going to start paying Bitcoin to these players, they've got to have the right licenses. They should probably have some sort of finance sector specialized in Bitcoin in each club for these players. And you got to start thinking about, okay, how are we going to protect the players as well and make sure that they're not taking their mind away from the podcast at hand. Not the podcast. Oh my God. Here we go. That's my housemate. Sick. Love that. Cheers, lads. All good. In terms of like, what am I saying? I've completely
brain fart.
Brain fart. No.
I got you, bro. I got you. You were talking about No, I know.
Cut.
Yeah, no. In terms of like, obviously, you got to protect the players. Is the main thing, and you got to have the right financial services. And again, all of these things are upfront costs. So it might not actually be worth it for a football club to offer a crypto cash currency contract to these players, because they might be saving their assets, but it might be just worth it to sell these players on, as opposed to having to have this upfront cost of starting up this finance sector and regulating, having all of these all these extra services that come with investing.
There's enough transactional fees that go on in the club as is. Like incorporating another financial section is just another burden, man.
It's not cheap, is it?
Hell no, bro.
And as you mentioned with the well-beings of the player, everyone can sort of see negative mental states of players really do hamper their on-field like quality. And at the end of the day, that's what football clubs have players for, is they want to play well on the field so they win games, win trophies, get success. Yeah. And if you're paying, if you agree to pay a player 50% in crypto and that crypto crashes, and he's all of a sudden, especially if it's a younger player, like that's like maybe an academy guy you just brought up, he's not on massive money. Maybe he's still living at home, or maybe he's just moved out, and all of a sudden, his pay essentially gets like halved or if not worse.
Mm.
You know, the psychological impact. Obviously, none of us are psychologists, but I can't imagine the psychological impact of that lending itself to, you know, good performance on the field.
Yeah.
Which is another
Pot
thing
and
they've got to
parcel,
think
man.
about.
Pot and parcel.
If the psychological effects that the amount of money that we're thinking of here, it could have a huge effect on the way that they play. You know,
Like, I'm actually surprised that this NFL player decided to do 50%.
I know.
Yeah.
That's way too much, man.
I'm surprised
It's
the club
very,
agreed.
very
That's what I'm more
risk-averse.
like.
Like you mentioned
like,
earlier,
yeah, right.
you mentioned in the article that having a cap on the on such a contract would actually be more beneficial because you're being it kind of lessens the risk that you are exposed to with the investment in Bitcoin, man.
Yeah.
50% is a huge amount of money. If you're talking about 13 million a year
Yeah.
with cryptocurrency investment,
It's a lot. It's so much money, and that's what we're getting on into like right now as well, because you got to start thinking as well, in terms of like, okay, if this becomes a thing and every single footballer is getting involved in it, let's say just the Premier League for example, there are 550 odd players in the Premier League, right?
yeah.
What is the average wage, Cameron?
So you've got here. Sorry, I've just still my little
that's all right.
my best researcher thing. So the average wage in the Premier League for a footballer is £12.48 million per year. So that's about $17.1 million US.
It's a lot of money.
So although not really realistic,
Yeah.
let's say just for example, every Premier League player, so for the 1920 seasons, there was 557 of them, introduced a 50-50 crypto to cash payment for their contract.
Mm-hmm.
That would make the Premier League probably one of, if not, one of the biggest Bitcoin investors in the world. So that would mean that they'd hold £3.48 billion of Bitcoin.
It's so much money.
So that's over $4.5 billion US.
Yeah, it's a lot of money
Per year they're buying as well. That's not like every year they'd be investing in that.
Yeah, and this to give you a bit of an understanding of just how much that is in terms of relativity. The current biggest investors in Bitcoin, a company called Grayscale, not a company, but like a hedge fund.
Would you like some help pronouncing that one?
Yes, please, Cameron. Go for it.
Grayscale.
Thank you so much. Here we go.
Tongue twister right there.
So I have to start off on the easiest name, eh? Grayscale with over $21 billion US in Bitcoin. So we're talking like, if with the Premier League with 4.78 billion, this is a lot of money. Like this is a huge amount of investment into Bitcoin for a football organization. It's crazy. Not that we're saying that the organization itself is doing it. We're just saying if it was a group together, as a group collective, that's how much the stake is in Bitcoin. And this goes, what we're trying to get with this is, okay, think of economics and way share prices are determined, right? It's all about like supply and demand, right? Mm-hmm. And especially in terms of Bitcoin, there's a finite supply with Bitcoin. So it's something like, what is it?
I don't believe it can pass. It's like 26 or 27 million. It's just the way that it's divvied out. So obviously, for those that don't have a very, there you go, 21 million.
21 mil.
Close.
Yeah, good job.
For those that don't have the understanding of sort of how Bitcoin are distributed, so the way it sort of works is a very simplified rundown version. So you have what is known as the public ledger. This is the classic one. So let's say we're all using it. So I owe George $50 and I owe Timber $50 or 50 Bitcoin. So this goes in this public ledger. So everyone can see this. And through a very complicated way of verifying, securing, making sure it can't be replicated. It's what's called like cryptography, I believe.
Yep.
This gets encrypted. This gets verified. Very complicated process. And each one of these transactions goes into what are called a block. Now, in each block, you can have a maximum of 1,700 transactions. And then someone needs to then verify that block. So that's when people say, I'm mining for Bitcoin, is they're actually verifying transactions. So they're verifying blocks. And these blocks, then once verified, go into the public chain. So that's where you get blockchain from. So this chain is then the public ledger of all transactions ever done through Bitcoin.
Crazy.
So whenever you successfully mine, so you verify a single block, you would get a miner's payment, thanking you for verifying the block and letting things, continue and function. So this is sort of the only way that new Bitcoins are created. So originally, the first ever block that was verified, the person that verified it, there's actually no transactions on it because it was the first ever one.
Yeah.
But he or she, got 50 Bitcoins. So right now, that would be nice.
That'd be worth so much money.
It's
like 3 million? It'd
be a lot.
Something more than that.
But yeah,
I
can't remember how many per a certain amount of transactions that happen. So roughly they've worked out every sort of 4 years, that number that you get rewarded halves. So this is why it comes out to you physically cannot get more Bitcoin than 21 million Bitcoins, because by then there won't be any more being created when you verify it.
Yeah, no more. It's currently being mined at a rate of about 900 Bitcoins per day. And we're currently sitting at 18.7 million Bitcoins. So I'd say we're close. We're getting close to the amount that can ever exist.
It'll still take a while though. It'll be
surprisingly
long.
Yeah, it'll take a while, because the way that it works is when it comes to mining, every single time one is mined, the mathematical equation to be able to mine the next one gets harder and harder.
Yeah, exactly.
It's just gets harder and harder.
It's really clever, actually. Obviously, I'm not a computer scientist person or even really great at coding, but the way they've done it, from my extensive research of YouTube videos over the years, is that the time to verify something takes 10 minutes roughly, give or take, not much.
Yeah.
That's no matter how many people are trying to verify the same block. So the more people that are trying to verify it, the harder it becomes.
Yeah.
And the way that happens is they have a 256 character string of ones and zeros, and so that, I worked it out, has the total possible combinations that number could have. It is 75 numbers long, so I don't know what that number is, but it's 2 to the power of 256.
Oh my god!
So it's a really, really big number. And the way they make it harder or easier is they determine how many digits from the start. So maybe it's the first 30 digits have to be a 0 when they're doing their verification thing, and if they increase that makes it harder, because it has to be the chances of it happening are lower.
It's so complicated.
Wink if you're following along.
Yeah.
So essentially, the more people that are trying to verify stuff, the harder it gets.
Okay, that makes sense.
That's what keeps it sort of constant, the influx of new Bitcoin.
And it essentially just gets harder and harder to mine Bitcoin. It's so complicated.
That just complicates the whole thing altogether. I mean, like a footballer saying, like, trying to understand that, he's not going to get it.
They're not going to get it.
How's Neymar going to understand that while he's playing?
Hey, Neymar, tamo junto, amigo. Tamo junto.
What does that mean?
Learn some new languages, George. Come on. I got you, bro. Let me look at your contract.
No, I comprende. That's so wrong as well. I didn't even say that right.
It's been a long night, George.
It has been. I'm such a mess right now. But yeah, essentially, all right. Proper tangent that we've gone on, but go back to where we were in terms of supply and demand. What this means when Premier League has such a big investment into one thing, Bitcoin. Like I said, there's a finite supply, and with the finite supply, it's very interesting, because once it stops, there's only a certain amount, and demand is staying the same, right?
Yeah,
it's staying the same. But there's going to be more investors. There's more people getting involved in it, and because they know it's a finite supply, like any finite supply, you see like gas, oil, like that sort of stuff, it's increasing in price, right? Because it's becoming more and more valuable, essentially.
Scarcity theorem.
Yeah. Not only that, but you've got to think about as well. More and more people are getting involved in this. Bitcoin is a price inelastic good. All right, that's what they call it. Price inelasticity, basically saying if the price changes, it doesn't really affect the demand. So when you think about a can of Coke, if a can of Coke goes up 100%, so you were paying $2, you're now paying $4, you're probably going to be like, no, I'll get a Sprite instead. With Bitcoin instead, you can see it in the market right now. Whether it's $10,000 or $40,000 or $60,000 or $100,000, the demand is not changing, right? It really doesn't matter. There might be a different change. That's why it's not perfectly price inelastic, but it is essentially it's relatively in an inelastic good. What that means is the stock price it's probably going to go up. Like, I can't say that it's going to go up or down, but the chances are, with more demand and more people are not inclined to not buy it because it's so expensive, it's essentially, you can expect it to increase and appreciate in value. Especially if someone with an investment of 3.7 billion pounds.
Yeah, 3.48 billion.
Yeah, you got to think about that. If an influx of investment like that goes into the market, you're going to see this price skyrocket.
I think really the sort of perfect storm sort of for it would be, getting it into contracts that are annual. So obviously essentially 3.5 billion pounds a year, and that's in a contract. So that means the clubs have to then purchase Bitcoin every year or all at once. To fulfill their contract. So that's guaranteed demand over years. So you look at situations recently with the whole GameStop saga, while it's not exactly the same, essentially that the Reddit investors worked out that they knew that the hedge fund managers would have to buy it back. So they knew that there was going to be demand in the future. That's why they were able to hold on to it and force prices up. Someone could potentially do that knowing that Premier League clubs have to buy it to fulfill their contracts.
Yeah, but there's that side of it, but then there's the other side of it as well where, okay, they know that there's going to be a huge influx, especially because Bitcoin's starting to be evaluated, supposedly tipped to reach $100,000, especially when these big companies like Tesla and Square are getting involved in it, right? And more people are facilitating its payment. If you have an influx of that much money going into it, it's appreciating the value, and investors are going to jump on board, especially those investors who aren't as educated.
It's a monkey see, monkey do type of
more
speculative.
Yes.
Good job. Yeah, speculative investments, and you can see that happening. The potential ramifications of this is, okay, for example, Premier League buys in at what it's at now, $60,000 a Bitcoin. That amount of money that goes into that. This is going to obviously be, along with more and more good news, you've seen it, it's appreciating. People are jumping on board.
More celebrities buy it.
Yeah. It's in the news, positive things. It's appreciating. Let's say it gets to like $150,000 a Bitcoin. You can expect, especially if these clubs do facilitate financial services, that sort of stuff. Imagine if the entire association says, you guys have made a healthy return on this. We believe it's kind of overpriced right now. We'd advise that you sell. That would be insane. That amount of money, like all of a sudden,
leaving the market quickly.
You're selling that position. That's going to have a huge effect on not only the share price, but you've got to think about the ordinary people who are getting involved on it. They're going to miss out. So the money doesn't just appear out of nowhere. Someone's gain is someone's loss. That's what's happening. That could, not what's happening. What could potentially happen?
It could be like a bubble bursting almost.
Yeah, and like obviously the word bubble gets tossed around way too much in that sort of sense, but that is essentially what you could say this is. So it's very, very, very risky for not just footballers, but also unknowing people, investors get involved in it. So
what would you say, George, is like your stance on like incorporating Bitcoin in such activities?
I find it really, really interesting. Like, obviously, I wouldn't have written it and wouldn't have looked into it if I didn't think it was interesting. You gotta think about it like this, right? So, Bitcoin is a floating market. It's decentralized. You can't stop people from investing in it because that's just what it is. Like, it's a free world. It's a free investment. People can do whatever they want. That's the beauty of it, and that's why there was so much going on with Robinhood and stopping people from investing. Like, no, you can't stop people from doing that. That is unregulated capitalism. Like, it's fine. Leave it alone. It's the same thing with this. You can't stop footballers from doing what they want with their money. It's weird. So it's sort of essentially what can you do? You can include a cap, but then you're stopping that thing of, you can only invest that much. No, what if I want to invest more? But you've got to make sure that you're looking after the players at the same time, not exposing themselves too much into one thing, and they can afford it if something goes wrong. So what I was thinking is, have you guys heard of the capital adequacy ratio?
Oh, it's been a while since I've done a finance course, but
Yeah,
I have
yeah.
heard the term. But go ahead,
Okay.
explain it to us.
So everyone knows the GFC, right? In 2008, it was devastating. All right, and all these banks took on huge risks, way more risks than risky assets than they had like assets. It took a huge portion of their entire assets, right? And they were left exposed when it all went to shit. So what was introduced was the Basel III, which was a capital adequacy ratio to ensure that banks were never too exposed to risk. So it's like a risk weighting asset. So they had to make sure they were under a particular threshold, a percentage of risky assets. I think it was like 8% or something. You could implement something like that, so that you as players can invest as much as you want, but we want to make sure that you are meeting certain guidelines for your sake, right? So below this threshold, so you're protected. You've got enough liquidity should anything go wrong. And that by no means that's going to stop you from being able to invest as much as you want, right?
Sort of like a crypto financial fair play almost.
100%.
Hopefully a few more teeth in that one, but
you just made a 5-minute talk into like 3 words.
That's why he's here, fam.
That's why he's here.
That's why he's here, come.
That's why I need to stop talking.
That is probably if this was to go a bit more mainstream in sport, I think that probably is a very likely outcome. Looking at previous case studies of clubs going financially bust and the effect that has on communities, on the clubs, on the players, it's quite a lot, especially in the UK. And so it is most likely in the league's best interest, looking at it from a league's perspective, that having some sort of regulation from them in regards to that, as George suggested, maybe a cap on the capital adequacy ratio of crypto they have in regards to the other assets they hold.
Yeah.
Did I get it right, Dad?
You did. Good job. Economics 101. Whee.
Yeah, I think that is probably a very realistic outcome.
Yeah. Like, of course, this is like way down the rabbit hole. This isn't going to happen. Like, we're not saying this is happening and this is going to happen. No, this is just like what could happen, so on, so on, so on. Yeah. It's interesting, but it shouldn't be a concept that's ostracized. It shouldn't be a concept that's like, this is going to happen. It's an interesting idea, isn't it?
Yeah, it's been an idea. It's like, overall for me, man, if I could just like dive it into my final thoughts on the whole thing. I think like it's a very like enticing idea that's available for players to do. Like, I think it's an option where players can choose to be mavericks in the market to try to like enterprise themselves, and not only their finances, etc. going forward, but I just also feel that they are traditional investing measures that they can also like take up hand. It's just the whole point of like a whole like education type of thing, and understanding your options instead of just going for one. Cryptocurrency and Bitcoin for etc. is very promising, but for me personally, just the inherent risks that it holds at the minute, especially with like the regulatory measures in terms of like government currencies and everything like that. I do know that in certain countries, certain states, the governments have actually used certain regulation rules to inhibit the investment in Bitcoin and the payment exchange. So definitely for a player, man, I just feel like it's just about knowing your options. You could go into like dividend stock, you could go into ETFs and etc. So there's definitely a whole bunch of options you could play into. Bitcoin is one of them. I just feel like it was a fantastic article by George in China.
Really interesting subject matter.
Thank you. I tried my best. I spent a lot of time on this. Like, I was well overdue, wasn't I?
I really think it is something very like unique. Obviously, that is our niche, but the fact that it's been applied into sports, I've never seen it being like, obviously Bitcoin's been talked to death, but no one's sort of thought of it in a sports sense. What would happen if it became payment?
It's like this is like one of the first articles ever on it. I think
not to blow your own horn, toot your own trumpet, whatever it is.
It's too good. No, I'm just talking shit, obviously, but it just goes to show like this could maybe happen. This could maybe just not pick up traction at all. Like, it couldn't. Maybe they've already talked about it and it's been like, no, we're not bringing this into the sport.
Hey man, in the age we're living in with incorporating VAR and all this tech stuff, you never know, man.
Tell me about it. There's so many changes going on. There's new rules coming every day.
I feel like it's definitely the kind of thing that you'll like, just it'll be a nothing thing and it just won't come about, or it'll like the complete difference. It'll just revolutionize the way contracts are made in sport and even outside of sport. Like this could be,
employment contracts could even go there.
earth-shatteringly, massive amount of change, or it could just be a sort of, fad.
It could be. Literally, this thing could all just blow down again. Like but it's just so interesting that football clubs can use Bitcoin and a diverse portfolio of income to combat contract negotiations. Like I think that's just
maybe
awesome.
Brentford start looking into it.
They probably have already. Like they probably have. It's just things like that, but we also got to think about, okay, if we're going to be introducing caps and stuff like that, you've got to understand that Bitcoin. The important thing with Bitcoin, right? Even if it does become a proper currency, it has to have two main characteristics, and you can think about which one you prefer or how you balance it. But you need to make sure there's stability, but you also need to make sure there's transparency. Obviously, you need stability, so it's not so volatile, because like that can't be a currency, right? If it's so volatile. The second is transparency, which is the whole idea of what Bitcoin was, right? It's deregulated. You don't want it to, unlike with cash and all that sort of stuff, you don't see what's going on behind closed doors, what shady stuff's going on. You want it to be transparent, and even if you do regulate it, you got to have the right balance, because you cannot take away from what Bitcoin is, otherwise it just becomes another currency, right? And that's a big thing, and that's what the sort of grey area would be when it comes to regulating player contracts and stuff like that as well. It's just so weird, but I hope that you guys found this interesting. I probably missed out some things, and we probably
That's what the comment section is
let
for.
us know in the comments, guys.
Yeah, we could have probably butchered it, but everything is in the article, so go to Soccernomics.net.
Didn't understand my long-winded explanation of what Bitcoin is.
100%. I got lost. I mean, it was amazing, but I got lost in your eyes.
Oh, look, you're only human.
But yeah, boys, I really appreciate you coming on for this one, because it's not an easy topic. I don't even completely understand it. I'm learning every single day, like every other investor probably is. But yeah, it's just really interesting to see what could potentially happen.
Yeah, definitely with like all the viewers, like let us know what your thoughts are on it. Like if we missed anything, if there's any gaps that you think that we could incorporate in our discussion, like please let us know, man. That's what we're here for. We exchanging ideas, exchanging information, and that's what Soccernomics is about, baby.
That's it. That's Soccernomics. Speaking of, that's what we're all about. We just want to say thank you for the amount of support we're getting on not only the YouTube channel, which has grown like, if you guys are new here, we've grown like very quickly.
Yeah,
I think we've got like 40% growth in the past 2 months. Like
that algorithm is amazing.
like yeah, it's astronomical. It's Bitcoin. We like GameStop, man. Let's just hope we don't crash like GameStop. Hey,
never that.
But yeah, we just want to say thank you so much for new and existing subscribers. If you haven't already, hit the subscribe button. Really appreciate it, so we can keep doing what we love. We're about to go play indoor soccer. We're playing against.
Bro, that's an easy win, though.
Easy win.
That's an easy win.
You saw what happened with West Brom, Man United, man.
Bruv.
Let's talk about that, can we?
Yes.
Let's talk about Liverpool for a second, but we're not going to go.
I thought you guys were going to win the league, eh?
That's right. We can talk
Worst
about
champions
Arsenal
in
winning
EPL
a game
history.
finally, guys.
Just saying.
We're not the same team. We're not the same team. We don't have Van Dijk. I'm not getting into it, man. I'm not getting into it.
That's next week's topic, right?
Hey, you want to ride it? Go for it.
Will Liverpool be relevant for the next 15 years again?
You're going to say relegated.
Relegated. Hey, could be at this rate. But yeah, really appreciate it, guys. Stay tuned for the next one. Yes, read an article on Soccernomics.net. I've got such a mind blank. I need bed right now, but yeah, read it on Soccernomics.net. We'll have the link in the description below, along with all the other things as well. But apart from that, guys, thank you so much for watching. Thank you, boys.
Take care.
And we'll see you later.
Bless.